Hello guys and welcome to another video. This is your financial reporting tutor Uzair Awan, and in this video we'll be starting with a new standard IAS 33 which covers EPS, earning per share. Now EPS, as some of you might already know, is a financial ratio and it is a very important one in fact. So let's start with the very basic, and first of all we'll try to understand what is EPS, how do we calculate it, how does it work, right? And then we'll look at some specific cases which you are required to know for your financial reporting exam. So first of all, what is EPS? So EPS basically tells you how much profit a company made for each share of a stock. How much profit a company made for each share of a stock. Now let's take an example and let's try to understand what EPS basically tells us, right? So we already know that EPS is a ratio, right? But what does it tell us? So first of all, we learned that it tells us how much profit a company made for each share of a stock, right? But let's try to understand this even more, that how can this be helpful for us as an investor, right? So an example that I have over here is that we are going to assume that there is a small company called Lemonade Company, right? And it made around $10,000 in profit. The company has 1,000 shares in issue in total till now, right? And what we are going to do is that we're going to calculate the EPS. Now, as you guys know that EPS is earning per share, right? So it's earning, it's the total earning that your company till date. So those are 1,000 shares as per the question or as per the example, right? And if I divide this, I'm going to get an EPS of $10. So now what does this EPS of $10 basically communicate to me? So it basically tells me that for every one share that I own in this company, for every one share that I own in this company, I'm gonna get $10. This $10 is my part in the company's profit, right? It's my part in the company's profit. So for every share that I held, $10 belongs to me from the company's profit, right? So this is what the EPS basically tells an investor, right? Now, a very important thing to remember is that EPS has a direct impact on the market price of the share. Now, for example, assume there are two companies, company A and company B. Company A has an EPS of $10, as you can see on the screen, right? The Lemonade Company, for example. And let's just say there's another company, I call this company B, for example, right? And it has an EPS of $15, right? So obviously, as a rational investor, I'll be attracted towards the company which gives me a higher EPS, right? In this case, it's company B because it's giving me a profit or a earning of $15 for every one share that I held, right? So obviously I'm going to be attracted towards company B, right? So what that means is, or what that shows is, the company with a higher EPS would eventually have a higher market value, right? Because obviously if a company is giving more earning than its competitors in the same industry, then obviously the market value of that company would be more because the people or the investors willing to invest in the company would be more, right? That's one rule of the thumb, that the higher the EPS, the higher the market value of the company, right? So I hope now you guys have a little bit idea of what is EPS, how it works, and how it helps an investor to make a decision, right? About which company to invest in, right? Now, this was just a simple overview, right? Obviously, there is much more that the IAS cover and that we need to know in order to attempt or cover this part of the syllabus for the financial reporting exam. So now, after having the basic idea of what EPS is and how it works, right, and what it communicates to the investors, let's try to understand how EPS is calculated as per our syllabus, right? So what is the formula that we are going to be using to calculate the EPS? So first of all, remember that EPS is going to be calculated by taking the profit after tax. Remember that in order to calculate EPS, you are always going to take the profit after tax. Alright, and then you're going to subtract any preference dividend if given in the question, obviously. If not, then you're just going to take the profit after tax. And if there's a preference dividend that is being given from the profit after tax, then you're going to subtract that first, and then you're going to divide it by the total number of shares, right? So that's gonna give me my EPS, earning per share. Now just to give you a small extract of the profit and loss, let me just show you. So basically, you know that we have our profit before interest and tax, right? And then we always subtract the interest expense from it, right? So we subtract interest expense from it. So once we subtract interest expense from the profit before interest and tax, we get our profit before tax. Then from profit before tax, we subtract our tax expense, correct? And once we have subtracted the tax expense, we finally get our PAT. Now this PAT is basically what belongs to the company, right? Because now you have paid all the interest that you had to pay on your loans. You have paid the tax which was due, right? And now whatever is left belongs to you, and that is profit after tax, right? So this is the tax which belongs to the company. Now as in ordinary shareholders, because we have already studied that in our previous paper, that there are two kinds of shareholder. One is the ordinary shareholder, and then there are preference shareholder, right? So we have studied this before as well, that preference shareholders are given preference over the ordinary shareholders. So that means that if, for example, there are any preference shares in issue, then the preference shareholder would get their part of the earning before the ordinary shareholders, right? So any dividend that is due to the preference shareholders would first be subtracted from this profit after tax, and then whatever profit is left, that would be given to the ordinary shareholders, right? This is what belongs to the ordinary shareholder. And in earning per share, while calculating the earning per share EPS, we basically take this profit which belongs to the ordinary shareholder and then divide it by the total number of shares, so that we can calculate that how much profit can I expect to get from the company's profit for every share that I held in the company, right? So while calculating the EPS, earning per share, it is this profit which belongs to the ordinary shareholder which goes over here in the numerator. As you can see, I already told you that in the numerator we always take the profit which is after subtracting the preference dividend, right? So we are taking the profit which belongs purely to the ordinary shareholders, right? And then we divide it by the total number of shares to get our earning per share or the EPS, right? Alright, so I hope that you guys are now developing on the concept of what is EPS and how do we calculate EPS as per our syllabus, right? And now one thing that I do want to add more while explaining EPS is that you guys see how we are using the profits to actually calculate our earning per share, right? So this is one of the biggest limitations of earning per share, that they use profits. And as you guys have studied before as well in the previous paper, that the problem with profits are that they are subject to manipulation, right? Because they are calculated after, subtracting the depreciation, amortization, and so on and so forth. So that depends on the policy of the company, right? So having said that, profits are subjected to manipulation, and perhaps that is one of the reasons why IAS 33 was launched, to govern this whole, earning per share and how it's calculated, and to make sure that it's fair and everything, right? So this is one of the reasons why we are studying IAS 33. All right. So anyways, now what one thing that I do expect from you guys is to not only write down what's written over here, but also the additional things that I keep on telling you guys, so that you guys can easily revise it. All right. So far we just looked at what is EPS, how do you calculate EPS, right? What is the formula of EPS as per our syllabus? What's the logic behind it? Now let's move forward. So after this, let's start with a very basic question. I'm going to be giving a very basic question of EPS calculation, and then from there we're going to start specific cases which are the requirement of the syllabus. So let me just create one question quickly. So that's question number 1, right? And like I said, it's going to be a very basic question. So let's say there's this company, right? This is 1 year, right? So it starts from 1st Jan. Say the company did earnings of let's say $20,000. Okay, so in this whole year the company earned $20,000, and the number of shares in issue, let me just write it over here, that the numbers in issue during this year or till date is 10,000. Okay, so the earnings of the company in the whole year are $20,000, and the number in issue are 10,000. So you have 10,000 shares in issue. Okay, so if I were to calculate my EPS, you know that the earning is 20,000, right? The profit after tax. This is a very simple question, so you don't have any preference dividends, right? And then divided by the total number of shares in issue, which are 10,000. So therefore my EPS is going to be $2 per share, right? So this is my EPS. So first question, very simple one, very basic to start with. Now let's move forward. You guys can copy this if you. Okay, so now we are going to look at different types of share issue, right? Because obviously this example that we have just done, a basic example, over here the company issued 10,000 shares and no new shares were issued during the year. But in real life, shares can be issued during the year as well, right? Then there are bonus issue, there is right issue, and so on and so forth, full market price issue, right? So we are going to look at all of these cases one by one, and we are going to see that, okay, if there is a full market price issue during the year, how we will account for that, right? Or if there is a bonus issue, how we will account for that? If there's a right issue, how we will account for that, right? So you have to look at specific cases. So that is our next area, right? Now we'll be looking at different types of share issues. Okay, and the first one on our list is the full market price issue. Okay, so full market price issue, that's the first one that we'll be looking at. So remember that the full market price issue is where the number of shares issued are at full market price, which is quite obvious from the name, right? Which means that it's not a free issue, right? So these are two things that you need to write down about a full market price share issue. That number 1, the total amount of share issued are at full market price, and number 2, they are not free issue, right? Now the reason why they are not a free issue is because they are not bonus share, right? Because bonus share is a free issue because you just issue new number of share and in return you don't get any new funds, right? But in a full market price share issue, whenever you issue new amount of shares, you get money, which means that you raise new money from the market, right? So that is the nature of a full market price issue. Okay, now let's take an example and let's see how do we deal with a full market price share issue question, right? So I'm gonna form my timeline again. So I'm gonna start with 1st January 2008. I'm going to extend this timeline and it's gonna end at 31st December 2008. Okay, and let's say right 6 months after the year start. So let's say it's gonna be 1st July, 6 month, right? So 1st July 2008, the company makes a full market price share issue of, let's say, 5,000 shares. Okay, so I'm just taking random values over here. So there's a full market price issue at the middle of the year of how many shares? 5,000 shares. Okay, and let's say that the earning of the company throughout the year is how much? The earnings of the company throughout the year is, let's say, $25,000. Okay, so let's take a number which is divisible by 5, so 25,000. Okay, so just taking random values over here. So let's say the earnings are $25,000. The full market price issue gave you 5,000 shares. So if I were to calculate my EPS, oh, by the way, before you made this full market price issue of 5,000 shares, the number of shares at the beginning of the year were 10,000. Okay, and then in the middle of the year you made more 5,000 shares issue, right? And the overall earning throughout this year were 25,000. Now let's try to calculate our EPS. So if I were to calculate my EPS, my earnings are 25,000, correct? And the number of shares that I have were 10,000 at the beginning of the year, correct? And in the middle of the year, I raised or I issued 5,000 shares more into the market. So that's 10 and 5, a total of 15,000, correct? So 15,000 and 25,000. If I divide them, I'm going to get how much? 1.6 something, right? 25,000 divided by 15,000. So I'm getting $1.67 per share worth of EPS. Okay. Now, let me tell you something. If you are calculating your EPS for a full market price issue in this manner, the one that I've just did, it's completely wrong. This method that you see over here, this is completely wrong. Okay. So one lesson that we have learned from this example is that if there is a full market price share issue in the question, we are not going to calculate the EPS like this, the way that we just did. Now, why is this method wrong? That is something that we have to discuss, obviously. And then what's the correct method? That is also we're going to look at. So first of all, why is it wrong? The reason why it's wrong is that, do you see that the earning, it's throughout the year, right? The earning that we have in the numerator of $25,000 is the earning for the entire year, correct? From 2008 at the start to the end. So it's the earning of $25,000 for the entire year. Whereas if we look in the denominator, we have total shares of 15,000, correct? That's the value that we have taken, 15,000. But if you guys notice, and if you look at the question more carefully, one thing that we all can agree on is that during this first 6 months, during these first 6 months, the total number of shares that we have were only 10,000. And it was in the second half of the year that we had 5,000 shares more, which means 15,000 shares, right? So it was in the second half, right? But what about the first half? First half, you only had 10,000 shares. then how can you divide the whole earning of 25,000 shares with 15,000 shares, which was just for the second half, not the first half? In the first half, you only had 10,000 shares, right? Because the new shares were issued in 1st July. So that means in this method was wrong, because we were not doing like by like comparison, right? We were not taking a 6 month to 6 month comparison. Rather, we were taking 1 year to 6 month comparison. Do you get it? Right? Because see, the earning was for the entire year, 25,000, the one in the numerator. But in the denominator, we had 15,000, which was basically after the 1st July when we made a full market price issue of 5,000 shares. So these 5,000 shares and the previous 10,000 shares, the 15,000 shares were for these 6 months. But what about these 6 months which were before 1st July? You only had 10,000 shares then, right? Then why are you dividing the entire year's earning with just 6 months of shares, right? So that is why this method is wrong, and I hope I have been successful to communicate to you guys that why is this method wrong. Okay, having said that, let's look at the correct method. So the correct method is very simple, and this is the method that you will be using from now onwards whenever you have a question of a full market price issue. And that method is something that we call as the weighted average method. Okay, and with this weighted average method, what you do is that you calculate the weighted amount of shares. Now what do I mean by weighted amount of shares? Don't worry, it's very simple, right? So I'm gonna just write over here WA means weighted average, right? Numbers of shares, weighted average number of shares is equal to, now look very carefully. Remember that I'm calculating weighted average of shares. Right now we are only concerned with shares. Okay, first of all, make up this mind that we are right now only talking about shares. Okay, and what are we doing? We are taking the average. Okay, so listen very carefully, it will all make sense. It's very easy. First of all, if you look at these 6 months, the first 6 months from 1st Jan to 1st July, you can clearly see that the number of shares we had were only 10,000, right? So I'm gonna write over here 10,000, and I'm gonna do 6 over 12 because these were only for the first 6 months, right? And then I'm going to add these with 10 and 5, 15,000 shares, right? Because in the second half, in the next 6 months, from 1st July to 31st December, you can clearly see that we have 15,000 shares in issue, right? 10,000 previous and 5,000 more, so that's 15. So I'm gonna write over here 15,000. That's the number of shares into 6 over 12 because those were again only for the 6 months, right? So 6 months, 10,000 shares, and for the next 6 months we have 5,000 shares. 15,000 shares, right? So if I take the weighted average of these, I'm gonna get 12,500 shares. Okay, so now this is the number of shares that we can take for the entire year. It's an average. Okay, and these would be perfect to calculate our EPS. Okay, so now if I calculate my EPS, my earning for the entire year was 25,000, right? The average number of shares that we just calculated for the entire year were 12,500. And if I divide these both, I am getting $2 per share worth of EPS. Okay, so now one thing that we have established from this question is that whenever from now onwards you are going to have a full market price share issue, you will calculate the EPS with the help of the weighted average method. And weighted average method works very simply. You just take the number of shares that are in issue before the full market price shares, right, which are 10,000 for the first 6 months. You do a bifurcation of those, right? So 6 over 12 because total of 12 months a year, right? And those were only for 6 months. So 10,000 into 6 over 12 plus. Then you further issued 5,000 shares more into the market, right? So 10,000 and 5,000 and 15 into 6/12, because again they were only for the 6 month, which is from 1st July to 31st December. That gives you a average number of shares for the entire year, which is perfect to calculate our EPS, right? So then we take our earning for the entire year, we divide it by the 12,500 shares that are issued into the market, which is our weighted average of share, and that gives us $2 per share worth of EPS. Okay, so this is the example of full market price share issue, and this is the first one in our list. We have more. We have bonus issue, we have right issue, right? So we have to look at more technicalities and more stuff. But don't worry, I'm gonna try to make this as easy as possible for you guys, right? But again, what I want from you guys is to copy this down, okay? And also not only copy the whatever is written on the screen, but also copy down whatever I speak to you, whatever additional things I tell you, right? Just make sure to write them as well, so it becomes easier for you to revise, and you know, while you're revising, it's gonna be easier for you to go through those concepts which I am explaining right now. Okay, so first thing that we have studied so far is how to tackle a full market price share issue. And like I told you, that in a full market price issue, you basically get more money, you raise more money. It's a full market price issue, and it's not a free issue. Okay, so I hope it's clear. Now what I'm gonna do is I'm gonna write another question, okay? And what I want from you guys is to write that question and then stop the video, okay? Because I'm recording this video for YouTube, so anyone watching me would be on YouTube, right? So you guys do have the option to stop the video. So stop the video, try the second question yourself by following the same technique that we followed in the first question, okay? Of how to calculate the EPS in a full market price issue, okay? And then you guys can resume the video and see me solving the question, and then you can compare your answers. Okay, so I think that's much more preferable. So let me just create the question over here. So we're going to start with the same 1st January 2008, the start of our year. Then we're going to make the end of the year, which is 31st December 2008. Okay, and let's say that at the start of the year, the number of shares that you have were 5,000. Okay, it's gonna be of 2,000 shares. Okay, so full market price share issue of 2,000 shares on 1st April 2008, and then on 1st November 2008, there's another full market price share issue. So like I said, in the real life, the company can raise new funds during the year, or it can raise new funds twice during the year, right? So this is the example where they are raising the fund twice in an year. So for the first one is in the 1st April 2008, and the second one is in 1st November 2008. And we have a full market price share issue of, let's say, 4,000 shares. Okay, so the requirement of the question is that you guys have to calculate the EPS, earning per share. And did I not write the earning? No. Okay, so for the entire year, let's say that the company had an earning of $20,000. Okay, so that's your earning right there for the entire year, $20,000. Okay, so guys, this is the question. You guys have the entire year earning, which is of $20,000. You have two full market price share issue of 2,000 and 4,000. All right, and the number of shares in issue at the beginning of the year were 5,000. Okay, so this is the complete information that you guys need for solving this question. And again, what's the requirement of the question? That you have to calculate the EPS, earning per share. Okay, so now you guys have the question. You can copy it down, you can pause the video, you can solve it yourself, and then resume the video to see me solving it. All right, okay, so I hope now you guys have solved the question. Now I'm going to start with the solution, and then you guys can see if you got the correct answer or not. Okay, so let's start. So first thing first, what I taught you is that whenever there's a full market price share issue, you always calculate the weighted average number of shares, right? You always start with weighted average number of shares. Just a second. Okay, so as you can see that at the start of the year, the number of shares that we have are 5,000, correct? And for how many months are these 5,000 shares in issue? So it's from 1st Jan to 1st April, right? And then in 1st April, we are issuing more shares. So 5,000 is only from 1st Jan to 1st April. So let's count together how many how many months are these? So from 1st Jan to 1st April, so that's Jan, Feb, March, 3 months, right? Remember that we are not going to count the month of April because guys, it's 1st April, right? So 1st April means that the April has just started. We will not count the entire April month because it's not 31st April, it's just 1st April, right? So you don't count the entire month of April. So we are going to count Jan, entire month, Feb, and March. That's it, 3 months. So 5,000 into 3 over 12. Then we are going to put an addition sign, and now we are going to look at how many more shares did we issue. So on 1st April 2008, we made a full market price share issue of 2,000 shares. So these were 5,000, 2,000 more, so 5 and 2 are 7. So now we have 7,000 shares in total in issue, right? And these are from 1st April to 1st November. So let's count how many months are these. So April, May, June, July, August, September, October. So these are 7 months, right? So I'm going to do 7,000 into 7 over 12, right? Plus, then on 1st November, we have another full market price share issue of 4,000 shares, right? So 7,000 were before and now 4,000 more. So 7 plus 4 is 11,000. So now we have a total of 11,000 shares issued in the market, right? And how many months are these? So from 1st November to 31st December, which is our year end. So November and December, 2 months. And remember that we are going to count the entire month of December because it's 31, which means the entire month of December has passed away, right? So November and December, 2 months. So into 2 over 12. So my weighted average number of shares are going to be 7166 shares, right? So this is the number of shares that I have in issue, and obviously this is an average number of shares. We have an average number, okay? So first thing first, we calculated our weighted average number of shares, and now we will calculate our EPS. And for EPS, you guys know that we take our earning, which is 20,000 right over here, right? And I'm going to divide it by the number of shares, which are 7166. So 20,000 divided by 7166. How much is that going to be? Let's calculate and see. So we have 20,000 divided by 7166. 20,000 divided by 7166. That's 2.79, right? So 2.79, or you can just round it off to 2.8. So $2.8 worth of EPS. Okay. So this is the question. This is the solution. I hope you guys got the correct figure. You guys got the correct answer. Okay. So this is how you tackle a full market price share issue whenever you have one in the question. Okay, you always start with calculating weighted average number of shares. Once you have your weighted number of shares, you calculate your EPS. Okay. Okay, so with that, our first case is done, which was of full market price share issue. Now we are going to move on the second case, which is a bonus issue. Now for bonus issue, I want you guys to write down these 2 points. Number one, bonus issue is a free issue. And number two, it's a not for value issue. Okay. So first thing, that bonus issue is a free issue. Why do I say it's a free issue? Because we have already learned that in the previous papers, and we already know that from our prior knowledge that in bonus issue, what a company do is that they distribute new shares, but they do not raise any new funds from the market, right? They do issue shares into the market, but they do not raise any new funds from that issue. Okay, so a bonus issue is usually done to the existing shareholders, right? You just give them more shares, that's it. No new money, no nothing, just new shares. All right, so a bonus issue is a free issue, number one. And number two, it's a not for value issue. Why not for value issue? Because there is no value added for the investor. Okay, so I'm gonna make two scenarios over here, right? It's gonna be from the perspective of an investor. Okay, and the first one that I'm gonna write over here is before the bonus issue. Okay, and the second one is gonna be after the bonus issue. Okay, so we have two scenarios, before bonus issue and after bonus issue, and I'm just gonna give you an example from the perspective of investor. Okay, so let's say that before the bonus issue I had earnings of $1,000 and the shares in issue of the company obviously were 100. So the company had an earning of $1,000 and the total shares in issue were 100. So the EPS of the company was $10 per share. Okay, so as an investor I will get $10 for every one share that I held in this particular company. Okay, so this was before the bonus issue. Now just stay with me. All right, so EPS is $10 per share and market price per share, let's just assume for example, was $20. Okay, so $20 was the market price of the share, the EPS was $10 per share, and that's the whole scenario before the bonus issue. Now let's say there was a bonus issue. The company makes a bonus issue, right? And let's say it was 100% bonus issue, which means that for every one share you held, you get one more share, right? So if you have two shares, you're going to get two more shares. Okay, so every one share that you have, you're going to get one more. So that's 100% bonus issue. Okay, so that means that the number of issue of the company would be doubled, correct? That means that the number of issue of the company would be double. Before it was 100, now you're making a 100% bonus issue, so it's gonna be 200 now, correct? Because again, 100% bonus issue means that for every one share that you have in issue, you're issuing one more share for that, right? So if I held one share in the company, I'm gonna now be holding two shares after the bonus issue, right? Because I'm gonna get one more for the one that I held. Okay, so obviously that means that whatever the total number of shares were in issue, they are going to double now. So that's 200. Okay, and my earnings are going to remain same. Why do I say that? Because obviously we did not raise any new funds from this share issue, right? Correct, we did not raise any new funds. So let's say my earning is 1,000, it's same. So what is the EPS now after the bonus issue? What's the EPS? Because see, before bonus issue it was $10 per share. After bonus issue the earning remains same. There was no new funds that we raised from the market through the issue, because in a full market price share you guys know that we raise new fund, right? But in a bonus issue we do not raise any new funds, right? It's just that you give more shares into the market, which actually causes your EPS to fall. And you can see that with a clear example that my earning remains same and my shares are now double. So what about my EPS? So if I divide these two, you can see that my EPS now is $5 per share. So do you see that if I keep my earnings constant, you can see that because of the bonus issue, the earning per share has reduced, it has fallen. So now my question to you guys is that if the earning per share is falling, shouldn't that be a bad sign for the investor? Because see, I just said this myself at the beginning of the lecture that earning per share, the greater the earning per share, the more valuable a company is, because earning per share is something which the investor is attracted towards, right? So if it's more, it's gonna attract more investor and thus your market value would increase, right? But if because of the bonus issue, the earning price share is reducing, as you can see in this example, given the fact that the earning remains constant, then shouldn't that be a bad sign for the investor? So yes, you might be thinking it's a bad sign for the investor, but let me tell you this, that it's not. Why? Because the overall um, you know holding, or the overall market price does not affect the wealth of the shareholder. Now, whatever I just said, let me clear this with the help of the same example. So we know that before the bonus issue, the EPS was $10 per share, the market price per share was $20, right? Which means that if, for example, let's take a number, let's say I have 10 shares in the company. Okay, I'm just taking this as an example, that I am Uzair, right? And I as an individual hold 10 shares in this company. Okay, and the market price per share of this company, as we decided, obviously this is also an estimated just an estimated amount. So if I have 10 shares in this company as an individual, and the market price per share of the share is 20, so 20 times 10, I'm gonna be holding $200 worth of wealth, of my wealth in this company, correct? Right? Easy. So my total wealth that I have in this company is $200. That's before the bonus issue, right? Now after the bonus issue, you can see that my EPS have fallen. Okay, because of the EPS, the market price would also fall. Why do I say that? Because I just explained to you guys that earning per share has a direct impact on the market price, because earning per share is what attracts the investors, right? So if my earning per share is gonna half, my market price is also gonna half, right? So it's gonna be from 20 to 10, because now it's half, right? Because my EPS has also fallen by almost 50%, correct? So my market price is also going to fall by 50%. Okay, so market price now is $10. So let's say, who was I? Uzair, right? I have 10 shares as an individual investor in this company, and obviously I still have the same 10 shares. So after the bonus issue, the real question is, does my wealth is effective? Because you guys just calculated my wealth with me, which was $200 right here, right? So if I have the same 10 shares still after the bonus issue, what will happen to my wealth, right? That's a question. Now, as you guys know, that the market price, the new market price after the EPS is fallen by 50% is $10. Okay, and will I still have 10 shares? I mean, yes, I still have 10 shares, but because of the bonus issue, I will have now 20 shares, correct? Now I will have how much? I will have 20 shares, correct? Why do I say 20 shares? Because I just explained it to you guys that it's a 100% bonus issue. The shares have doubled. So if I have 10 before the issue, now I have 20, because the company has given me 10 more shares, right? For every one share that I held, they give me one more share. So that means if I have 10 shares, they're going to give me 10 more shares. So that's 20 shares now, correct? And what's the market price of the share now? It's $10. So 20 times 10. What is my overall wealth? $200. So do you see this? Even before the issue or after the issue, my wealth does not change, right? So this is the point that I was trying to make, that it's a no value addition issue for the investor, because you can see, yes, my earning per share has reduced, the market price share of the company has reduced, but my shares have also increased. So the reduction of market price is leveraged by the increase in the number of share, right? My shares, which were only 10, have now become 20, right? But yes, though my shares have increased by 10, my share price has also decreased by 10. So that increase of 10 is leveraged by the decrease of 10, right? Do you get it? So you can see that there is no overall change in my wealth. Okay. All right. Okay. So I hope this concept is clear, right? Now let's jump to the questions, that how are the questions going to be like, and how we will tackle the question of bonus issue. So bonus issue, remember, write these few points more about bonus issue. The first 2 points that I told you guys were, number one, that it's a free issue, and number two, not for value issue, right? And I just explained you why it's a not for value issue with respect to the investor. Okay. And now there are two more points that I want you guys to write down. Okay. The first thing is that the bonus issue is adjusted from the beginning of the accounting year. Now, what does that mean? Don't worry, we are going to look at an example and everything's going to be clear. But what I want from you guys is to write it down. Okay, write what I'm saying to you. That bonus issue is adjusted from the beginning of the accounting year, and you always adjust it through bonus factor. Bonus issue is adjusted from the beginning of the accounting year. Number two, you always adjust it through bonus factor. Okay. Now don't worry, what is a bonus factor? What do you mean by the adjustment of beginning of the accounting year? We will understand this all with the help of an example. So here's an example, a very easy one to start with. So like always, I'm going to take my year. So let's say that it is 1st Jan 2009, and the year is gonna complete at 31st December 09. Okay, so that's our one complete year right there, and the number of share issues that we have at the beginning of the year are how much? 10,000. Okay, and then around 1st November, we made a 1 for 5 bonus issue. Okay, so this is the information that we have. And one thing that I always forget is that during this entire year, you guys need to have an earning amount to calculate your EPS. So that's gonna be 20,000. Okay, so throughout the year, you guys, the company, all right. So throughout the year, the company earned $20,000 worth of profits. The number of shares at the start of the year on 1st January 2009 were 10,000. At the end of the year, we don't know. We will calculate that. On 1st November, we did a 1 for 5 bonus issue. So that is the only piece of information we have. And then the question asks us to calculate the EPS. Okay, so that's the requirement of the question. Okay, so now how are we going to calculate the EPS when there is a bonus issue? So like I said, first thing, that you are going to adjust the bonus issue from the starting of the year, right? So that's the point that I made you guys write down, that it's not like the full market price issue that you bifurcate the months, that okay, this month is going to be 10,000, the remaining months is going to be whatever the issue is, and then that's it. No, you're not going to do it like the full market price method. No, right? What you're going to do is that over here in the bonus issue question, you will always adjust the bonus issue amount from the beginning of the year. Okay, so don't worry, we will look at that in a second. But one thing, remember that you need to learn how to calculate something called as the bonus factor, because without learning how to calculate bonus factor, you cannot solve these questions. Now, what is a bonus factor? So remember that the way to calculate bonus factor, there's a way, right? And you guys have to just learn that way. That's it. Okay. So that way is that you guys need to remember that whenever we start our question, whatever the number of shares that we have in issue, for example, in this case is 10,000, they represent 100%. Okay. Just remember this. Okay. So whatever shares that we have in issue, those represent 100%. All right. Just learn that. Okay. So now 1 for 5 bonus issue. On 1st November, we made a 1 for 5 bonus issue. So 1 for 5 means that for every 5 shares that you had in the company, you got 1 share as a bonus issue. Okay. So every 5 share that you held in the company, you get 1 more share. Okay. That is what they mean by 1 for 5. Okay. Now let's see what does 1 for 5 means in terms of percentage, right? So 1 over 5 into 100, if I do that in order to calculate in terms of percentage, so 1 over 5 into 100, that's going to be 20%, right? So 1 for 5 represents 20%. So that I can say that before our shares were 100%, then we made a 1 for 5 bonus issue. So now they are 20%. So in total, now our shares represents a percentage of 120%. Okay. They represent how much? 120%. All right. Now this is not the bonus factor, right? Bonus factor would be that if I convert this 120 into a non-percentage, so I will have to divide it by 100, right? So it's gonna be 12 over 10, which when simplified is 6 over 5. So this 6 over 5 is basically my bonus factor. So whenever we are solving a bonus issue question, you guys need to learn how to calculate bonus factor, and trust me, it's not that difficult. Let me repeat it again, and then you guys would just have to learn this method, because there's no way. You just have to learn it, and it's very simple. First thing is that you guys need to remember that we will always take 100%, because whatever shares that we have in issue before the bonus issue, okay, whatever shares we have in issue before the bonus issue would be 100%. We will just assume that they are 100%. Okay. Then we did a 1 for 5 bonus issue. So we are going to see that what is 1 for 5 in terms of percentage. So that's 20%. 1 over 5 into 100, that's 20%, right? So that means before we had 100% shares, then we issued 20% more. So now our overall standing is 120%. So now after getting this percentage, I'm going to convert this into a non-percentage. So I'm going to divide it by 100, and then I'm just going to simplify this. So whatever fraction I get, this fraction is called the bonus factor. Okay. So I hope this is clear. Now let's take an example of few more bonus issue, just to get a grip of this area where we have to calculate the bonus factor, because again, this is very crucial if you want to solve the questions of bonus issue. All right, related to EPS. Now let's say over here we had a 1 for 5 bonus issue, right? Let's say now I am changing that, and I have a 2 for 3 bonus issue. Okay, a 2 for 3. So let me just write it over here as well, 2 for 3. So that means for every 3 shares that you have, you're going to get 2 more. Okay, so if I convert this into fraction, 2 over 3, that's going to be how much? 2 over 3 into 100, right? Because I need to convert it into fraction, so I multiply it with 100. So 2 over 3 into 100, that's 67% after rounding off, right? So 67% is your bonus issue percentage. Okay, and before that, whatever number of shares I had in issue, I don't care whatever the amount is, because it's always going to be 100%. So that means a total of 167%. And if I convert this into a non-percentage amount, it's going to be 167 over 100, right? And then you can just simplify that. So it's going to be your bonus factor. See? All right. Similarly, let's take another fraction. So let's say you have now made a 1 for 4 bonus issue. So if it's 1 for 4 bonus issue, I'm going to say that, okay, whatever number of shares I had in issue before this bonus issue would be always 100%. I don't care what the number of shares is, it's going to be always 100%. Then I made a 1 for 4 bonus issue. So 1 for 4 bonus issue, if I convert this into percentage, would be how much? 1 for 4. 1 for 4, how much is that going to be? That's going to be 25%, right? So 25%. So 125, if you add them, that's 125%. If I convert this into a non-fraction, it's going to be 125 divided by 100, right? And if I simplify this, 125 divided by 100, you're going to get 5 over 4, right? So 5 over 4 is your bonus factor. See, right? So this is how you guys learn it, right? And obviously, the more you practice these questions, the more you will get grip of it. It's not that difficult. You just have to learn it, okay? So you can see I just did these 3 different examples just to explain you guys how to calculate the bonus factor, okay? So if you guys want to copy these 2, you can, because I'm just going to erase it because I need more space to solve the question, okay? So you can just copy it and then I'll erase it. Okay, so I hope now you guys have paused the video, copied it if you wanted to, and now I'm gonna erase it. Okay, so now coming back to our question, right? So we did a 1 for 4 bonus, 1 for 5 bonus issue, and we got our bonus factor as 6 over 5, okay? Now, so far what we have learned is how to calculate the bonus factor while we are solving a bonus issue question. But so far, that's the only thing we have learned. We have not seen how to actually calculate the EPS in a bonus issue question, right? So let's quickly see this and complete this area. So we have our bonus factor 6 over 5. Now what we are going to do is that we are going to write that our EPS is equals to our earning, which is 20,000 for the entire year, right? Divided by our number of shares. Now what you're going to do, listen very carefully, you are going to take the number of shares of 10,000, okay, which were your number of shares at the beginning of the year, and you are going to multiply this number of shares with your bonus factor. So the bonus factor that we got for this question was 6 over 5, okay. And if I do this, 20,000 divided by 10,000 into 6 over 5, I'm going to get $1.67 per share. And this is my answer. Okay. So what I did is that I take my earning for the entire year. I took my number of shares, which were at the beginning of the year, 10,000. And I multiplied this with the bonus factor, which I got as 6 over 5. And I got my earning per share as $1.67 per share. Okay, now after teaching you guys how to calculate the EPS in a bonus issue question, what I want is to repeat that particular point that I just told you guys a few minutes ago, which was that bonus issue is adjusted from the beginning of the accounting year, right? This was the point that I made you write. Bonus issue is adjusted from the beginning of the accounting year. So that is exactly what you can see over here, that unlike the full market price share, where we used to bifurcate the number of months, we did not do that over here, right? We only adjusted the number of shares with the help of the bonus factor from the beginning of the year, right? So we adjusted the number of shares from the very beginning. We did not wait for 1st November to come and then do the adjustment. No, we adjusted it from the beginning. That's why we have an EPS of 1.67 per share, and this is exactly how you will be solving all your questions. Okay, so I hope how to calculate the EPS in an example of bonus issue is now clear. Right now, obviously, we are going to move forward towards our next question. And in this question, we will again, it will be related to the bonus issue. But I have to actually communicate another very important thing. which is actually related to bonus issue. Okay, and we have to learn that also because that's part of our syllabus. So what I'm thinking is that I am going to first of all, okay, let me just do it like this. All right. So I just got an idea. Let me just do it like this. Then let me just give you an year. So the year is from 1st Jan 2009 to 31st December 2009. Okay. So 1st January 2009 to 31st December 2009, and it is on 1st November that you are told by the question that the company has made a 2 for 5 bonus issue. Okay, and the earnings given to you in the question for this entire year is around $60,000. Okay, I think that is it. Okay, no, wait. So the number of shares at the beginning of the year would be 25,000. All right. So 25,000 at the beginning of the year. Then on 1st November, there's a 2 for 5 bonus issue. Then there's an year end. Then we have earning of 60,000 for the entire year. Okay. Now, obviously, you guys are going to solve this question yourself, right? But for that, you will have to pause the video, solve it yourself with the same method, same technique that we have learned over here in this question. And by following this technique, you will solve this question. And then you're going to resume the video to check your solution with mine. Okay. Alright guys, now I'm going to start solving this question with the hopes that you guys try to solve it yourself first. Okay. So because this is a bonus issue question, we are going to start with the bonus factor. Like I told you, always calculate bonus factor before you calculate the EPS, because as you guys have seen at the top in the previous question, that you cannot solve the question without the bonus factor. So how do I calculate the bonus factor? I know that whatever the number of shares are in issue before the bonus issue would always represent 100%, right? Then there's a 2 for 5 share issue. So if I convert 2 to 5, 2 for 5 in terms of percentage, that is equivalent to 40%. So a total of 140%. If I convert 140% into a non-percentage or a fraction value, I'm going to divide it by 100 because it's a percentage, right? This and this cancel out, so it's 14 over 10, which when simplified can be 2 7 and 2 5, right? So that's 7 over 5, and this is my bonus factor. Okay, so I hope you guys got the correct bonus factor. Now, after this, what we are going to do, we are going to just adjust the number of shares from the beginning, right? So I'm going to calculate my EPS now. Very simple. The earning for the year given to me are 60,000. The shares that I had in issue at the beginning were 25,000, and I'm just going to multiply these with my bonus factor, which is 7 over 5. So my EPS is gonna be equivalent to $1.71. That's my EPS. All right. So this is the complete solution for this question. I hope those who tried to solve this before got the correct answer. Even if you didn't get the correct answer, then you can look at my solution and see what went wrong. And for those who didn't even try this, well, now you guys have the solution, so you can just see. And this is how you're going to solve this question. Now, what I said previously, that this question will have something new, and obviously to add something new to this question and to explain to you a very particular concept of restated EPS, I will have to extend this question a little bit. Okay, so we are going to continue with the same question, just that I am going to connect this question with the previous year. Okay, so what was the year in this question? From 1st Jan 2009 to 31st December 2009, right? Now I am going to extend this question by adding the previous year. Okay, so just watch what I do over here. So I just extend this question with adding one more year, a previous year. Okay, and it's gonna be from 1st January 2008 to 1st January 2009 or 31st December 2008, means the same thing, right? So that's the previous year, right? So now we have 2 years. This is the first one, this is the second one. For the second year, we have already calculated the EPS, right? 1.71. Now for the first year, let's see what information do we have. We have an earning of how much? $50,000. Okay, we have earning of $50,000 for this entire year, and the number of shares in issue were how much? 2,000. All right, and then let's say on 1st of July 2008, they made a full market price issue. A full market price issue of 5,000 shares. Okay, so that means in the previous year of 2008, there is no bonus issue. Keep that in mind. Okay, that in this entire year of 2008, which I have just added, we did not have any bonus issue. We did a full market price issue, but no bonus issue. Keep that in mind. Okay, now let me just create a line over here, a kind of a border. I was hoping for a more straight border. Wait, let me just create it. Okay, so what it is supposed to do is that it is supposed to just correct it automatically. There you go. So yeah, there is a little border, right? So this working is for the 2009, right? And now we are going to do the working for 2008. Okay, so now what do we have to do in 2008? We have to just calculate the EPS. Okay guys, so a full market price issue, and as you guys know, we just learned this few minutes ago, that whenever you have a full market price issue, the first thing that you are supposed to do is to calculate the weighted average number of shares, right? So as you can see that at the beginning of the year, we have 20,000 shares in issue, correct? And from 1st Jan to 1st July, these are 7 months, so 7 over 12 plus, then we made a 5,000 share issue, so that's 20 and 5, so that is total 25,000 of issue now, right? Shares in issue now. So 20,000 before, 5,000 more, 25,000 shares issued now. And from 1st July to 1st Jan, those are 5 months. Okay, so 5 over 12, right? So that gives me a value of 22083 shares. Okay, so that is my weighted average number of shares, 22083. Correct? Alright, so now after having my weighted average number of shares, I'm going to calculate my EPS. So my earning is 50,000. My weighted average number of shares that I just calculated is 22083. So that's going to give me an EPS of 50,000 divided by 22083. That is $2.26 worth of EPS. Okay. So now we have our EPS for 2008 and we have our EPS for 2009. Now the real question is that why did I extend this question? Why did I add one more year to it? Obviously there is a reason for that, and the reason is that I have to explain you guys a concept, right? Now here is the full picture. Now look at the full picture, right? Because if you want to understand this concept, what I'm 2008, the EPS, earning per share of the company, was $2.26, right? But when you receive the reports of the company in 2009, you can see that the EPS of the company is $1.71. So if you are an investor, obviously, see, when we talk about the investors, they don't know about all this bonus issue and all these technicalities, right? So they are not chartered accountants, right? So whenever they look at the numbers, they only look at EPS. So if I'm an investor, I'm going to look at this data like this. Obviously, I'm not going to have all this working given to me because anyways, I'm not going to get the working, right? Because I'm an investor, I'm not a chartered accountant, right? What I would be given is this figure, right? That the EPS of the company was $2.26 in 2008, and now in 2009, the EPS of the company is $1.71. Now, if you're an investor, I just told you that you want the EPS of the company to grow, right? But now you can see that the EPS of the company has fallen. So maybe you will have this perception that the company is performing bad, right? You will have this perception as an investor that the company is performing bad. That is the reason why the EPS is falling, right? So the point is this correct? No, it is not correct because we can see that there was a bonus issue in this year in 2009, right? And it is because of the bonus issue that the EPS has fallen, right? And I just explained you guys this concept above that because of the bonus issue, the EPS falls, right? So if the EPS is falling, it is because of the bonus issue. But obviously, the investor does not know that because again, I keep on saying this again and again, the investor is someone who has money to invest into the market. He knows a little bit information about the market, but he does not know the technicalities behind it. He does not know about the calculation. He is not a chartered accountant, right? So what he sees is only the numbers, only the figures, right? So he can only see that the EPS is falling, and that's the only thing he sees. He does not know the reason because why is it falling, but we do know that it is because of the bonus issue, right? So if we are the company, how do we communicate this to the investors that see this EPS that you see is falling is not because of our bad performance. It is because of the bonus issue that we have made in 2009. So what we do is that we calculate something called as the restated EPS. We calculate something called as the restated EPS. We calculate something called as the restated EPS. So how do you calculate the restated EPS? There is a very simple formula to do that, right? And it is called again restated EPS. Restated EPS. You are restating the EPS, and which EPS are you restating? The one of the previous year, which does not have the effect of the bonus issue, right? So you're going to restate that. So how do I calculate the restated EPS? There's this one formula which goes something like this, that you take the last year EPS, the last year EPS, which was 2.26, and you times it by 1 over the bonus factor. Okay, so you take the last year EPS and you times it by 1 over the bonus factor. Okay, this is the formula for the restated EPS. This is the formula for the restated EPS. Okay, so I'm going to calculate the restated EPS so that I can show the investor that hey, if I take this effect of bonus issue for the last year as well, then this is what my EPS is gonna be, and this is what you should compare rather than comparing the one which does not have the effect of bonus issue with the one which have the effect of the bonus issue, because that's not fair, right? So we are going to calculate something called as the restated EPS. So let's quickly do that. In this case, our restated EPS would be calculated by, we will take the last year EPS, which is how much? 2.26, correct? So 2.26, and I'm going to multiply this with 1 over bonus factor. So 1 over, and bonus factor is going to be this one, 7 over 5, right? So 1 over 7 over 5. So if I do that, I am going to get 1.62. That is my restated EPS. So now, after giving the restated EPS, what we are telling the investor is that, see, the last year EPS was 2.26 because last year we did not make any bonus issue. We did not do any bonus issue. So if I adjust the bonus issue with the last year EPS, this is what the last year EPS is going to look like, 1.62. So now if you compare the last year restated EPS with this year EPS 1.71, you can actually see that our EPS is increasing. Yes, the increase is not that much, but it does not matter as far as there is an increase or as far as the EPS is constant. The EPS should not fall. It can either be constant, that is also considered good by the investor, or it should rise. That is perfect. It should not fall, right? So if I remove, no, I should not say remove. I should say that if I add the effect of the bonus issue to the last year EPS, this is what my restated EPS is going to look like. And now you can compare this restated EPS of the previous year with this year, and you can see this is the actual performance of the company, that the EPS is increasing. Okay, so you see, this is the concept of restated EPS. And now this restated EPS with the EPS of 2009 is gonna go to the investor for the year ended 2009, which means that for this year 2009, with the annual reports, this restated EPS will also go, right? So in the annual report, you will have an EPS of 1.71, and also below this EPS, you will have a restated EPS also given as 1.62, so that the investor can do a like by like comparison, which is fair, right? And again, this restated EPS is of the previous year 2008, okay? And this is of 2009, but this restated EPS of 2008 will go with the EPS of 2009 in the 2009 annual report that will be given to the investors, okay? The annual reports of, or the financial statements of 2009 would be sent to the shareholder. In those financial statement, or in those in those annual reports, this EPS of 2009 will also be written like this, 1.71, and 2008 restated EPS would also be written, which is 1.62, like this. So he will have a complete document which will have both of this, right? So this is just so that the investor can do a like by like comparison instead of a comparison which is not fair. Got it? So this is the whole story. I hope now you guys have a clear idea. This is how you do the calculation. So this was it for today's class, because there is much more and we cannot cover that in one lecture. So there are going to be, I think, 3 to 4 lectures in which I'm going to try to complete this entire chapter and this entire standard, this entire area in the same detail as I have done today. Okay. So we learned what is EPS, we learned how to calculate EPS, we looked at how to tackle the full market price share issue, right? How to calculate EPS for a full market price issue. Then we looked at the bonus issue. What is the concept behind bonus issue? Then how do you calculate the earning per share in a bonus issue? And then we looked at what is restated EPS and how to actually calculate restated EPS and what is the purpose of restated EPS. So we had a look at the complete picture in a way that makes sense, I hope, right? So that is it for today's class. If you guys like this video, please share this with your friends and anyone in your circle who is appearing for financial reporting exam and for whom this video is going to be helpful. Make sure to like, subscribe my channel. If you guys have any problem, you can always ask me in the comment section, or you can see the WhatsApp number on the screen, so you can always WhatsApp me and I will try to explain to you guys whatever queries you might have. All right, so that is it. Let's keep the class to here for today, and I'll meet you in the next video. Till then, take care. Goodbye.